Gold in the past was very marginal, but we have seen a rapid demand for gold in our country. I think it has been a phenomenon that has been shared in many Asian economies. I believe I saw a report recently that in India, the gold imports have been as high as $37 billion. So there has been a rapid increase in the gold holdings in the people of our country, which is also reflected in some other areas as well in Sri Lanka, with pawning which has gone up quite rapidly. And we have also seen motor cars imported to the country in the range of about $1 billion. And petrol has cost us $1.5 billion more this last year than in the previous year. So there has been a major change in the way that we have done business with the world. And that has been an interesting phenomenon that we need to take cognizance of. Tourism entered a high growth area, slowly inching towards the $1 billion mark. I remember many years ago, many in the tourist trade were quite angry with me because I said they have to reach $1 billion before they can be taken very seriously. So they are making me eat my words, which is a very good thing, that they are moving towards $1 billion, which I believe is a good thing for the country because it expands our economic horizons as well as ensures that investment momentum is maintained. So it's a good thing, and we are presently having 197 hotel projects which are capable of building about 12,500 rooms in operation today, the work in progress. And I think the tourist board, as well as all the other major players in the industry, are taking their work very seriously to improve the per capita day spending of the tourists as well. Several new things are happening in the tourism industry. New hotel chains, the Shangri-La, the Sheraton, the Hyatt, the Sun City are coming in. New airlines have registered since 2010. Miris has now established itself worldwide as a top spot for watching blue whales. Surfers are coming back to Sri Lanka, and new shipping lines are also showing interest in coming to Sri Lanka. So these are all trends that we need to take cognizance of. The workers' remittances has been another area where there has been rapid improvement, up 27% from last year. And as a percentage of GDP also, it has improved quite significantly to about 8.8% from 8.3%. And we believe it has the potential to grow to about 11% of GDP. And that can be a very important factor in our overall economic scenario as time goes on. We have to give particular attention to skilled labor migration without just sending people who are unskilled, to send skilled people when they go abroad, to see that the average wages are going up, and also to make sure that there are improved arrangements for the money to be remitted into Sri Lanka. So we have to work closely with the banks to ensure that it is convenient for people to send their money as well. The deficit in the trade account has been contained to a significant extent by the high inflows of workers' remittances, and also the inflows on account of other emerging services, the transportation, the computer and the information BPOs, the insurance, the business services. So a new equilibrium is being fashioned once again in our economy in those areas. The foreign capital inflows have continued to be significant. The bond issue in July 2011 was oversubscribed by 7.5 times. FDIs exceeded $1 billion for the first time in our history. And the limit on foreign investment in Sri Lanka rupee-denominated government securities was relaxed from 10% to 12.5%. And the gross official reserves being equivalent to cover about 4 months of imports has also been established. And exchange rate has remained competitive even in a very high volatile external environment. The fourth sovereign bond was something that many people responded to very eagerly. And we must sometimes ask, why did Sri Lanka do a bond issue of this nature? I think the important factor there is that we addressed the deficiency that has been in our economy for a long time, the savings and the investment gap. For a long time, we were talking about Sri Lanka having a savings gap. So you need to do something about it. Then you need to have new monies, savings from outside the country to come into our economy. So that was allowed to happen, and as a result, savings that have taken place in other parts of the world came into the country through the bond issues that the government had, and we need to ensure that that gap is always addressed even in the future. So it need not be the government that does it. It can be the private sector, corporates as well as banks, which should now move and obtain the funds necessary to keep the economy on this growth momentum. I remember every time when we used to go on the road shows to market the bond issues, we used to tell the foreign investors, look, once the government has had these bond issues, you can be sure that the private sector will follow. But for the last 2-3 occasions, we have to go back and tell them, look, the private sector hasn't still come, but they will come. But I think finally, we see the private sector stirring, and they are moving towards increasing the savings in our country with savings from outside. And that is an important trend that we should follow, because if we are to move to a $100 billion economy, we cannot use only the organic savings in our country. We have to have new savings that have to come in, and that has to move in with the rest of the savings in our country in order to move forward. So we have to be able to move to these new trends as well. Our gross official reserves have remained at comfortable levels. Of course, it has come down to about 6 billion by the end of 2011, compared to 6.6 billion that we started off at the beginning of the year. But there has been a very good benefit that the country has received as a result of these usage of the reserves, because we have been able to provide the stability that is required. And the international reserves were deliberately brought up to a level of about 8.2 billion due to the large-scale absorption of foreign exchange by the central bank. Sometimes people question us as to why we have applied some of the reserves. So I asked them, do you question the food department when they buy grain at the time of the Maha or the Yala? You need to buy at the time when there is a glut, when there is an excess, and hoard it and keep it so that it can be released at the right time so that consumption could take place without the price being disturbed too much. If there has been a shortage of food or a shortage of paddy, whom do you blame? You don't blame the farmers. You blame the intermediary, the person who is at the middle, who had the capacity to absorb it and release it at the right time. So the central banks also have to provide that stability to economies, which is what we have done. And if you don't blame the food department at the time that they do that, I don't think you should really blame the central bank also at the time when they deliver stability to you. People need stability. People need to be able to have a steady price in the commodities that they deal with. So for banks as well as for importers, they all need a steady, comfortable price which does not fluctuate too much. If there was too much of a glut of dollars coming in, and then the rate has come down to 95 rupees for a dollar, and then after that, when there was no money coming in, if it had gone up to 125, I don't think many people could have done business appropriately in this country. So they have to recognize the stability factor that has been brought in by the central bank, by the government, to ensure that there is a platform on which a stable business could be run. The central bank has been confident also. It has not been a reckless endeavor. It has been confident of the inflows that are due to come in this year. And that is why we set out those inflows also. And we didn't take the easy path out. Many people could have taken the easy path and allowed these fluctuations to take place. We could have curtailed imports. We could have said we don't want imports to come in. And we would have put the economy into a different spin. Instead of doing that, we have taken the difficult path to ensure that monies come in and opened out new avenues from which monies could come in. We have encouraged the banks to increase their Tier 2 capital. There was sufficient space for them to increase their Tier 2 capital. Use the balance sheets in order to be able to bring in the money. If you have a very good balance sheet, a AAA rated balance sheet or a AA rated balance sheet, you must use that. The balance sheet is not only to be raising monies within the country, it is also to raise monies outside the country. So you have to use these benefits that you have developed for yourself in order to ensure that the savings gap is met, that new monies come into the country. And when you look at the net stock market inflows, we are firmly of the view that Sri Lanka will have a new inflows coming in. When you take the stock market, you have a market cap of 2.2 trillion rupees, roughly about $20 billion. A $500 million inflow is only about 2.5% to 4%. So you can have that kind of trades taking place in our country, and we are firmly of the view that that would happen in the next few months as well. If you take 2.3% of the market cap, which is $500 million, it's not a major number. It may appear in absolute terms as a high number, but it's really not so. And as a result of the central bank policies, the exchange rate did not suffer unnecessarily. And even in the past, we have not taken the easy way out. We have made sure that the delivery of stability is maintained. The fiscal consolidation that has been undertaken by the government has been extremely useful, and the fiscal deficit this year would be below 7%, down from 8% of last year, and all credit should go to the very well-managed exchequer, which has ensured that our fiscal policies are also maintained in a way that will bring stability to the country. Thereby, it has led to the debt to GDP ratio falling to about 78%. And this year, Sri Lanka's estimates for the debt to GDP ratio sits very comfortably with the rest of the world. If you look at some of the countries that have been set out in that chart, you will find that Sri Lanka is one of the lowest at 78%. Many of the other countries are 80%, 100%, and some are as high as 165% as well. If you look at the risk indicators of the public debt, it has improved all around. If you take the UN SCAP manual, there are many ways in which a debt of a country is measured. I have deliberately used some time to show this to you because there has been many stories that I have read in the newspapers which attempt to show that Sri Lanka is a highly indebted country and that we are struggling with our debt. The actual situation is quite the contrary. If you look at the Sri Lanka's debt position, and when it is evaluated against stringent considerations that have been set out globally, you find that Sri Lanka is assessed as a moderate in one area and as a less indebted country in 5 other areas. And we will have this for you so that you can have it yourself. The continuous upgrade in infrastructure has greatly enhanced the country's productive capacity, whether it's roads, power projects, port development, mega hotel projects, ongoing rural infrastructure or lighting of Sri Lanka, all have been important for us to keep the momentum. And private sector investments are now on the move on the back of the government's infrastructure development projects. New hotels, new terminal in the Colombo South Port, new industries in Hambantota Port, universities, fisheries, all that is taking place. And the central bank's monetary policy in 2011 was a cautious one. And even when there was temptation for us to reduce rates, we did not do so because we wanted to have a consistent policy which gives a certain amount of stability to the economy. Instead of moving it up and down, we ensured that there was a certain stable environment that was set out for the business and delivered stability in our view. Market liquidity has now reduced to manageable levels, and the private sector credit has expanded rapidly, although it has been on a low base. Sometimes this is another area that has been misunderstood, that the private sector credit has risen far too sharply. Yes, in absolute physical terms, it may appear so, but it has been on a low base because if you look at the graph, you'll find that it came down and then it was going up again. So that slack had to be first of all taken up, but that slack is not taken into the consideration sometimes in the way people present it. So we have to be conscious of that. And since, as a central bank, we have been conscious of that, we have been not too eager to take steps to curtail that growth because we knew that the growth was a function of the low growth in the past. Broad money recorded year-on-year growth of 19.8%, which was, in our view,